All right. I got in as soon as I could. I mean, a hurricane just hit the zone and it's leaving me with very little connection, but I'm good. How was everybody doing? We are live, I think. So today we're going to go. We're going to do a couple of cool things. We're going to look at the US dollar. If you have any questions, just post it on the chat, people. We are here for that. If you want me to look at something, just post it on the chat too. All right. So where's my I'm just going to go ahead and open my charts and yeah, share my screen, right? So I'm sharing this screen, number 3. All right. So can everybody see my screen? I hope so. Yeah, I think everybody can see my screen. So let's talk about the US dollar. Hold on. Yeah, the US dollar. This is the DXY, the US dollar currency index. Again, if you have any questions, just post it on the chat. If you can hear me, yeah, I think everybody can hear me. Let me just open up YouTube so I can also have the chat on my other screen, right? So you can see that the US dollar currency index is looking like it's bottoming, right? And that's quite interesting given the fact that we are in a heavy sell-off or have been in a heavy sell-off for the US dollar for quite a while. Actually, since March, I'm going to show you everything and most importantly, I'm going to show you what I am looking to trade, or how I am looking to trade this this market, right? So hold on, just give me 1 second and I'll start. Right, just making sure that we have sound. Yep, we have sound. So this is the thing, right? Since March, we have been, or March, the end of March, April, we have been in a heavy sell-off on the US dollar, right? And the last bounce from the lows was in at the beginning of September, September the 1st, when we went from the 91.80 level to the 94.80 level. So that was kind of a big deal because it was a 3.25% appreciation on the US dollar, right? In a very, very bearish market, you know. This is, of course, due to the heavy round of quantitative easing that we've seen due to the pandemic, right? Big central banks, central banks have been printing crazy amounts of money, buying treasuries from commercial banks to support the economy, right? But now we are seeing the US dollar bottoming, or the DXY in this case bottoming around the 91.80 to 92.20, right? And right now on the short term, it looks like the US dollar wants to break higher, right? Which would in fact be a play on this range that we are currently in, right? Between these two big levels. Actually, I'm going to be using, I'm going to use this, I'm going to use some boxes, right? Because these are two big levels that we are currently trading, that the DXY is currently trading in. So this gives us a big range to play possible US dollar long, right? If in my opinion, if we break with the previous high, which is this one, right? This right here, I'm sorry, around the 92.75, we could in fact be in a nice bullish play on the US dollar. Now, how we're going to be playing this US dollar long, you might ask. Well, I'll tell you right now. Let's go to my majors thingy right here. So how are we going to be playing a US dollar or a strong US dollar? Well, in my opinion, there's a couple of ways that we can be that we can look to trade a strong US dollar. The first one is, of course, a short on the euro US dollar. Now let's get rid of all the drawings and let's look back at what the US dollar and the euro US dollar has been doing, right? Now the euro US dollar is trapped inside of a range too. And if we compare the euro US dollar with the DXY, the US dollar currency index, right, you can see that it's clearly invertly correlated. Now let's zoom in this. I believe I can do it like this, right? I'm going to change this color to a brighter color, right, to a yellow. Boom. So we can appreciate, wow. So we can actually appreciate the correlation. So whenever the DXY spikes higher, the euro US dollar, of course, spikes lower. Hello, SF Lee, how are you? Nice to see you here, mate. Hey, don't forget about the expo this weekend. I'm going to be speaking on Saturday at 8:15 p.m. Singapore time, so don't miss that. It's going to be awesome. And there's a lot of other speakers doing their thing too. It's going to be great, actually, so don't miss that out. If we can send the link on the chat for SF Lee to register, that would be awesome. So I was saying that before you came in, I think we were looking at the possibility for a long in the US dollar, right? And it's my belief that the best play here should be a short on the Euro USD, right? This is the comparison between the Euro USD and the DXY. I'm going to delete the DXY. I hate clutter charts. And what we're doing right here is this. Okay, so we have a bottom here, a clear bottom on the US dollar, right? On the Euro USD, I'm sorry. I don't know, maybe this. No. All right, I like that. So we have a clear bottom on the Euro USD, right? Whilst we are inside of what seems to be a continuation pattern on the DXY. Now, having said that, I believe that the key level that we need to break in the DXY for us to be able to short the Euro US dollar is the 92.70, not 92.70. If and when the DXY breaks with this spot right here, we should be good to short the Euro USD, which would give us, in fact, a great risk to reward. Why? Because we will be actually, or I will be putting my stop losses just above the previous high. If you want to be more conservative, you can put your stop losses above the previous high around these levels. Well, this is actually the wrong one because it's a long. I need a short position. And of course, I will be targeting, because this is a short-term position, right? I will be targeting the low. So the range, that would give me a 1 to 2.45 risk to reward ratio. And anything above a 1 to 2 risk to reward ratio is good enough for me to take that trade. That's a 200 pipper right there. So my play on a long or on a strong dollar for the end of the week would be that, exactly, the short on the Euro USD. Now let's have a look at the we have the Canadian ADP non-farm employment change today, and we have well, there's nothing going on the US side. Well, we have unemployment claims and the Philly Fed manufacturing index, right? Unemployment claims, I don't think we're going to have a big move on the market with unemployment claims, because as you can see, after of course, the coronavirus pandemic spike, in unemployment claims on a weekly basis. I mean, this was huge. We've kind of based in a. I mean, we are still around that 700K to 1 million unemployment claims per week, right? But we are kind of I mean, expectations come or the actual numbers come as as expected by analysts. So right now that doesn't move the markets. We have the Philly Fed Manufacturing Index. This is actually something that I do follow, and if we get a surprise number like we did on the past month, on October we got that we were expecting how much? Let's see, right here around 13. And we got that spike at 32.50, 32.30. Now we are expecting a lower number, but remember that analysts are conservative when it comes to expectations because they hate to see a wide difference between their expectations and the reality, right? So I do believe that we are going to come above expectations, which can boost the right, the US dollar short term. That could be the trigger we are looking for, right? So what I'm going to do is I'm going to put on a sell stop on the Euro USD, right? This is something that we don't do normally here on the show, but I'm going to start doing it. And remember, this is only for educational purposes only. So I am not an advisor, and I'm not advising you to take any trades with me, right? This is my risk disclaimer, and let's carry on. So what I'm going to do, right? So this is the 50-minute chart. Let's go to the hourly, and this is the base I need price to break with, right? I would be keen to short the Euro USD below this base. Because I like to keep my stop loss wide enough to give my trade enough room to breathe, I will be putting my stop loss here. I think that putting my stop loss above this high would be too conservative in my opinion, because this is a short-term play on the Euro US dollar. If it would be a swing trade, I would definitely put my stops above that high. But since we're trading the short term, within a couple of days for targets, I'm more than happy to do this. So I'm going, let's see. So that's a 93 pip stop loss, right? So let's call it a new order. And hold on, let me see. The actual low that I need to break is this one right here. So I need a break below the 118.05, right? Sell stop 1.1805. And remember that also the Euro US dollar is hold on, I'm going to be selling, so that's a quarter of a lot. All right, so that's well, 118.05 I said, right? Remember that 18.05. The Euro USD is also at the top of a very long range. I'm going to show you that. And my stop loss would be around the 119. Yeah, 119 is fine. 119, right? And my targets are at the 116.20. So that's 116.20. That's the play on which I'm risking 95 pips to make 1850. So that's my play on the Euro US dollar, and let's have a look. All right, let's have a look at what's going on under the Euro USD. So we have been trapped inside of this range at the top of a very bullish move, right here, at the top of a very bullish move for a while now, right? So if we look at what has happened, hold on. Yep, if we look at what has happened so far after this big move, this was a big move to the upside, right? we are talking about from low to high of the move. And I'm taking this high because after this high, we started to range. That's our 1,123 pips or 10% move on the Euro USD. And that was on July 31st. After that, we started to range, right? And the range that we are currently trapped in is more defined, in my opinion. But still, this was a short position that I took on the Euro US dollar, where I was targeting these lows, and the Euro USD failed to follow through on that short breakout and started to range. So I'm going to play the range on the Euro USD. Why? Because I'm playing the range on the US dollar, right? So for everyone that just joined us, this is the trade that I just took, and of course that I am not advising you to take any trades. But the idea behind this one, I think it's quite good, right? Now let's have a look at some key levels that we might be following, right? So this is the previous week's low, and this is the weeks before low. And the thing about this is that this low could give us some kind of a resistance, right? But I am not going to take profits here because of my risk to reward ratio, right? What I'm going to do maybe is move my stops to break even, and I don't know if I'm going to do that because it's only 73 pips. I'm actually going to let that ride. And if I see that price breaks, let's imagine that price does this, right? And if I see the price breaks with two lows or two highs, I'm sorry, I'm definitely closing that at break even. But that's the only reason that I would do that, because if we break to the downside, it would be US dollar triggered, because the US dollar would break with this reversal pattern at the bottom of the range, right? Which and the level that can give us, let's use the same indicator, right? Here you go. The level that can give us some resistance on the US dollar is this. It's this week's high right here, the top, which is the top of this reversal structure, which is basically the same but inversely on the Euro USD, right? So you need to be watching for those levels too on what seems to be a very good short opportunity on the Euro US dollar. Now, the reason that we are not going to look for a continuation below these lows is because we are fundamentally bearish on the US dollar long term, right? And we are only playing. Even though we are bearish fundamentally speaking, we are going to be playing a US dollar strength on the short term, right? That is completely fine as long as we are acknowledge and we trade the plan, right? The plan is the short term strength on the US dollar and paying attention to this level, right? If we reach targets to the downside, we close our trade. And if price continues to move below the our targets, that would mean that the DXY would in fact break with this heavy zone. And by then, we would look for new shorts on the Euro US dollar because of the bullish breakout on the DXY. But fundamentally speaking, this is not something that we are looking for. If it happens, we will be looking for new shorts, but we do not move or we do not trade on wishful thinking here, right? So if you have any questions, just post it on the chat. As always, I am here for that. I'm more than happy to, yeah, to answer your questions, to look at some markets that you want me to look. We are here for that, right? I mean, it's cool and everything, but let's develop ourselves as traders. Okay, so let's talk about gold to finish this off, right? And the gold has been quite difficult to trade, or has been, right, this week. But if you notice right here, there is something quite interesting, right, in gold. And that is that we are hitting the bottom of a range. Again, range plays all the way. I mean, when markets are not trending, you have to look for ranges, right? And sometimes, I mean, trend traders are not going to be happy with ranging markets, and that I understand completely. But I mean, when there's no uh, hold on. When there's no clear trends, I like to go to the range plays. But when I do, I don't use my full risk on my trades, just because I'm a trend trader, a swing trader, right? But it's completely fine if the setup falls into um, my rules, right? And this is not a trade that I will be taking. Why? Because if we have a big US dollar move to the upside, well, I mean, it's pretty plausible that we're going to break to the downside. But the thing about this gold, people, is that this is a super strong level of support. I'm sorry, right here. You can see it, right? Everybody can see that. This is a super strong level of support. And on the 4-hour chart, we are printing a nice reversal candle. I'm sorry. Yeah, we are printing a nice reversal candle. The thing about this is that, I mean, we are really above that zone. But let's see on the 4-hour chart the risk to reward ratio on the possible long here. Yeah, I would need a break of the previous highs, of course, and our range place would give me a less than a 1 to 2. I'm not so sure if I'm happy with this. I don't know if I'm happy with this, to be completely and utterly honest with you, just because where price is trading. So let's go back to the hourly chart. Hold on, let me just this. Let's go back to the hourly chart, and that's it, right? So let's zoom in on this. Of course, that stop losses would have to go below that zone. Entry should go here, and yeah, targets all the way up here. Yeah, I mean, the reversal that gold is printing at the bottom is quite good, right? I mean, it's quite visually, it's quite good, right? We are making let's go to a 50-minute chart so we can appreciate it. We are making all right, so now I see it. Now I see it. We are making kind of a reversal pattern here, right? And we are but we need a clean break of this what seems to be a neckline, right? Not a neckline, but the current structure that we are currently testing. So my entry was completely and utterly correct when I said that I needed a break of the previous high. And also we are printing a new higher low on the 50-minute chart. Remember, I don't trade the lower time frames myself, but this looks very good on the shorter time frame, right? But I'm not going to take it because I am looking for a stronger dollar on the lower time frame, on the on the immediate On the what? I'm sorry. On the short term. Yeah, on the short term. Thank you. So that's why I'm not too keen to taking a metals long. But I mean, it might work. It might not work. But my bias tells me not to do it. Well, we're getting a breakout here in gold. We are getting that breakout in gold, and short term. I mean, short term, this could be quite interesting. Also, if we look at a day trade, well, this might work as a day trade, right? Yeah, I mean, it could work as a day trade, but I am not taking it, right? Because I have that Euro USD short. So that my bias for today is long, or a strong US dollar. So that conflicts. I mean, this long on metals conflicts with that. Right. So if there is not a question for everybody that just joined us, this is something that we are thinking about taking. Um, if the US dollar breaks to the upside today, right? If the US dollar breaks to the upside today, I'm more than happy to take this short to the bottom of the range for a shorter. Yeah, for a short-term U.S. dollar strength. If there's not any if there is not a question from you, let me remind you about this weekend's expo. It's going to be awesome. There's a lot of people with bright minds speaking. I personally am going to be speaking on Saturday at 8:15 Singapore time. So if you wanna join me, that's the time I'll be on. But if not, I surely recommend you do, because this is going to be I mean, the sheer amount of experience and knowledge in this expo is mind blowing, and I recommend it to everybody. All right. So if there's not any questions, I will see you all next week with Loy. And thank you again for joining me, and have a great weekend. Okay. See you later.